Today we're going to be talking about how you can get paid every month simply by owning stocks in certain companies. Now, if this doesn't sound interesting, then I don't know. Nutella, isn't it interesting for you? I think she already knows about what we're going to talk about. But if you don't, then stay tuned for more. We are obviously still in very volatile times with markets going up and down, economies possibly crashing, and it's very difficult to predict the future. And when you look at the stocks and cryptocurrency, there's so much volatilities, big swings going up and down. So just a few months ago, you could have bought any stocks and without doing any research, you know it would just go up because it was a bull market, it was booming, and the only direction was up. Now that we have inflation kicking in and we're starting to see the repercussions the global pandemic is taking on our economy, we're starting to see the impact on the stock market as well. And that can be really heartbreaking, especially for first-time investors, because you put your hard-earned money into the market and all of a sudden, a few weeks later, it's worth 30% less. Now that hurts, trust me. I've been there, I had the same. We're all going through this if you invested. Now sadly, there's no secret that you can avoid losing stock prices. But there's one thing that you can do to mitigate the risk and actually benefit from monthly cash flow payments. So what we're talking about is dividends. Now dividends is an amazing tool that's unique to the stock market. Think about banks a few years ago when there still was times of interest rates. It's almost hard to remember those days when you went to the bank, you put your hard-earned money and they would actually pay you interest on your money. These days are sadly gone and I'm not sure if they ever will come back, because with all the quantitative easing, meaning banks keep on printing money in the hope of stimulating the economy, in the process the interest rates have come down to a point where you have zero interest or even negative interest in certain countries, which is crazy. You put your own money and give it to the bank and they charge you interest for it. So the old principle of saving all your money and putting it into the bank account like our parents taught us no longer works. And that's why so many people are rushing to cryptocurrency, rushing into the stock market. But as I said, not everybody has a stomach for these big swings. So what can you do about it?
Please remind them to subscribe and like, otherwise you will never grow your channel, my friend.
You heard her. Siri never lies, so appreciate if you could hit that subscribe button, like the video. It helps out the channel a lot. And that's where dividends come in. Dividends are an amazing financial instrument that certain companies on the stock markets are using, and it's basically parts of the profits that the company earns and dedicates towards their shareholders. Meaning that every month, 3 months, 6 months or annually, depending on the structure of the company, they will pay you, the investor, a percentage of the price of the stock. So even if the stock goes down in price, you as an investor will still get your dividend paid because the company promised to set aside some of their profits really dedicated towards the shareholders. And obviously they do that because they know they attract more money from investors because it's an attractive investment vehicle to own stocks that pay dividend. So that's why they dedicate parts of their profit towards their shareholders. Now usually the stocks that pay dividends are mostly very established, very long-lasting companies. Startups usually don't pay dividends because obviously a startup needs to use all their funding and invest it into R&D, research and development. They want to grow the company, come up with new ideas. But more established companies that have a track record of profit, of revenue growth year over year, they can more predict the future going forward and as such set aside a certain amount of money that they just keep for the shareholders. Now when we talk about dividend payments, it's usually called dividend yield. So that's a percentage of the stock price that they will be paying out. So in case you have a $100 price for a stock and they would be paying $5 as a dividend, that will be a 5% dividend yield. Now what are common percentages? It really differs depending on the company and on the niche they're in. On the low end side, you have some massive companies where you know your money is going to be safe. Companies like Microsoft and Apple, two of the biggest companies in the world, in addition to growing your stock value over time, are still paying a very small quarterly dividend, which currently is around less than 1%. It's still a very small amount, but again, you're holding one of the greatest companies, which naturally will increase over the years. And in addition, you're going to get a quarterly cash flow paid by them. So that's amazing. On the high end of yield paying stocks, you have a bit more risky and volatile companies. Often these are real estate companies or certain tech companies that want to attract investors' money and as such are willing to sacrifice certain funds towards R&D and instead appeal to future investors by paying a high yield. I've seen yields up to 10%, which is extremely high because again, don't forget, that means that 10% of their total profits are taken away just to pay to investors. And that's big money that is missing to develop the company further. So be mindful of that. As exciting as it is to get 10% paid, I mean, who wouldn't want to have a 10% guaranteed dividend every month or 3 months paid to them? But there is a reason for it. So there's either a risk, the company hasn't been very long operating, and that's why I personally go for something within the middle. Anywhere from 2 to 4.5–5% on the high end is legit, is reasonable, and still allows the money to use certain funds to reinvest into future growth, because I'm a long-term investor and I want to make sure the company is well positioned for the future. So when you get your dividend payments, you have two options. Either you can get it paid into your account and you can just pay it out for yourself and live off it and just use it as normal cash, and that's amazing. The only thing, every time you get it and you pay it out to yourself, you're going to have to pay tax on that. That's in the majority of countries. So from a tax point of view, it may not be the smartest thing to do. Another thing that people actually recommend is to use something what is called drip investing, where you basically reinvest all the dividends you get into your stock. So basically you buy more stocks with the dividend. In the times of fractional shares, even if you get $5 from Apple as a dividend, you can reinvest to buy $5 worth of Apple stock. So doing this over time will actually compound your stock portfolio. And from a tax point of view, it's much more attractive because actually you're not going to pay tax on the reinvestments, only once you sell your stock and then cash out. So I usually like to reinvest my dividends because that grows my stock in the long term. But as you get older and you maybe want to stop working or you want to retire early, there is actually ways, once you build up a strong big portfolio, that you can actually live off your dividends. Imagine you have a portfolio of $1 million of various dividend stocks that pay on average 5%. So that would mean that in a year you make $50,000 or euros, whatever is your currency. And that's something you could definitely start living off. So imagine on a 2 million portfolio, that's a 6-figure annual amount that you're getting paid in dividends. And that's really not too bad for not doing anything. Passively earning dividends, letting your money work for you. While at the same time your stocks will further grow and compound due to natural stock appreciation. What did you say? You're upset that people watch the videos and not subscribing? Guys, you heard that. Don't do it for me. Do it for little Nutella. So as you can see, a really fascinating topic. Personally, I used to own quite a few dividend stocks in the past. I have to admit, I sold all of them. I did get a bit greedy when the stock market was booming and really bought a lot of US tech stocks because I saw this huge growth and momentum they had. But now, as I said, the market is changing. I want to make sure that going forward, I will have a good portion of my portfolio invested in these solid, stable, dividend paying US stocks. Because I really like the idea that they are paying me on a regular basis for owning their stocks. So I'm a shareholder and I get paid parts of their profits. Sounds pretty amazing to me. The dividend yield for most companies grows year over year. And that's the amazing thing. So they're even adjusting your money for inflation because as money obviously loses certain value, the growth of dividend compensates that and pays you on top of this. I think it's something we're coming back as value investors to really balance your portfolio, to have some high growth stocks, tech stocks, but in addition, I really recommend to have a few solid paying dividend stocks that grow year over year. Some of them are called aristocrat dividend stocks. That means for at least 25 years in a row, they have been increasing their dividends year over year. Imagine 25 years, how many crises the companies have been going through, yet they've still managed to maintain that constant increasing of the dividend. It may not be something if you have a small portfolio that you can live off right away and quit your job, but I think it's a nice additional income that you can either reinvest as a drip model, or you can actually cash out and pay certain parts of your life's expenses. With this, I thank you so much for watching, guys. Give it a like, hit the subscribe button, and let me know in the comments which is your favorite dividend stock you either already own or planning to buy. Stay awesome, stay blessed, and I'll see you in the next one. Take care. Ciao, ciao.